Hello viewers, welcome to my channel. I'm Hasham. So last video I have completed the topic working capital. That is chapter number 5 in financial management for BBA. So in working capital I have explained you the importance of working capital. Working capital consists of the funds required for short-term obligations. A business needs funds for long-term as well as short-term. The long-term funds are required for purchasing the fixed assets, whereas short-term funds are required for meeting day-to-day operating expenses like purchasing the goods, payment to suppliers, monthly electricity bill, telephone bill, and salaries and wages. For all these short-term purposes, the firm needs funds, short-term funds. So working capital is nothing but the amount required for meeting current operating expenses. Gross working capital, net working capital, all those things I have explained in the last two videos. In this video, I am going to explain you about the cash management. Cash is one of the important part of working capital. Working capital consists of current assets and current liabilities. Current assets minus current liability, you will get net to working capital. So cash is a very important part of working capital. So in this video, I'm going to explain you about the cash management, importance of cash, and also how to manage the cash, how to maintain the cash, and what are the techniques available for managing the cash. That's what I want to explain in this video. Theory is also important from examination point of view. Be perfect about the theory. Apart from that, I've started uploading the videos for members. So if you want different type of videos, general type of videos which will be very knowledgeable, all these things you can find in my members club. So join the members club and avail the knowledgeable videos, other knowledgeable videos I am going to upload for members only. And before starting the explanation of this cash management, take the screenshot of the points which I have written, then I'll explain every point. Come on, now we'll start cash management. The first point, cash management is an important function of finance manager. It is one of the responsibility of the finance manager to manage the cash. Manage the cash means sufficient cash should be there in the business so that all the current obligation can be met on time. So for the survival of the business, it is very much essential that there should be adequate cash. Without cash, a business cannot function properly. Just like it is a fuel, as long as the fuel is there in the vehicle will move on. When the fuel is over, the vehicle will stop. The same is the case with cash. It is very much essential for the survival of the business that sufficient cash should be maintained, right? And next, it is a duty of the finance manager to have liquidity to all the parts while maintaining the cash. Cash is required in every department of the business, whether it is production department, purchasing department, sales department, research department, personnel department. Every department of the organization requires cash. Now it is the responsibility of the finance manager to supply the cash to all the departments so that the department should not suffer due to lack of cash. On the other hand, he has also to ensure there are no funds blocked in cash. Excessive of cash, that is also dangerous. The finance manager has to ensure, has the responsibility that cash should not be idle. Excessive cash should not be there. That means both are evils. Shortage of cash is evil and excessive cash is also evil. Then how much cash? Adequate cash. Adequate cash should be maintained by the business, neither more nor less. Idle cash resources entail a great deal of cost. If a business is having idle cash, बेकार कैश रखा हुआ है, तो उससे दो लॉसेस होती हैं. एक लॉस, द इंटरेस्ट चार्जेस. Suppose if we do not require fund, but still we have taken a loan from bank, what will happen? We have to pay the interest. We have not utilized the funds, but you have to pay the interest. That is the cost incurred for idle cash. Secondly, opportunity cost. Opportunity cost, had we invested this cash in some other alternative, we would have earned some return. We are foregoing the return because we have not invested. We have kept the cash idle. The opportunity cost of not getting the return. These are the two costs we will incur if there is idle cash. Now, need for motives for holding cash. Why the cash is required? So Keynes, one of the economists, he says 3 motives are there why a business will hold the cash. The first motive is the transaction motive. The cash will be held in order to meet the transactions. Every day, so many transactions are conducted. Some goods are purchased, some expenses are paid. So every now and then, and monthly salary has to be paid, electricity bill has to be paid, telephone bill has to be paid, miscellaneous expenses, so many expenses have to be paid. These are the transactions. To meet the transactions, cash is necessary. So, the first motive why the business will hold the cash is transaction motive. Secondly, precautionary motive. Precautionary motive says the life is uncertain for life, personal life of the people and also business. Business also, so many uncertainties may happen just like in our personal life. We don't know what will happen in the future. Future is completely uncertain. In the business also, we don't know what will happen. All of a sudden, there is a breakdown of machinery. All of a sudden, there is a small fire. All of a sudden, the main employee was sick. Then in that cases, to meet this precautionary situation, some cash should be there. If the business is holding the cash, then uncertainties of the business life can be met. That is the reason why cash is being held. Second motive. Third motive, speculative motive. Speculative motive means if you have the money, you can encash the opportunities. In future, we don't have only risk, we also have opportunities in future. That means if an opportunity is arising, the business can avail, can grab that opportunity if it is having cash. If the business does not have cash, it cannot encash. It cannot take the benefit from that opportunity. So speculative motive means to keep the cash in order to avail or grab the profitable opportunities which may arise in future. So these 3 motives have been specified by Keynes why the business will hold the cash. Next is estimation of cash requirement. We cannot say, a generalization we cannot make that every business must have some 2 lakh rupees of cash in hand. Every business should maintain 5 lakh rupees cash in hand. We cannot make any generalization because it differs from one business to another business. The nature of business will be different. The size of the business will be different. Just like a doctor cannot prescribe the same medicine to every patient. He has to see what is the nature of the disease. What is the problem with the patient? Accordingly, different type of medicines he will prescribe. Same is the case. So requirement of cash depends on so many factors. Now here I am going to explain you how a business will estimate the cash. How much cash it requires. So the first step in cash management is to estimate the requirement of cash. For this purpose, cash flow statement and cash budgets are required to be prepared. Normally, 2 techniques are there for estimating the cash. The first is cash flow statement and second one cash budget. So normally these 2 techniques will be applied in order to estimate the cash. Next, the term cash flow shows the flow of cash as a result of operating activities. Every day so many activities will be conducted by the business like purchasing the goods, selling the goods, paying the expenses. All these transactions will involve either inflow of cash or outflow of cash. So cash flow consists of both cash inflows and cash outflows on account of operating activities. From the conventional profit and loss account, the company may not have sufficient funds to pay even salaries. Now people will think that we are preparing the profit and loss account. The profit is the cash. No, there is not a difference between profit and cash. There are many profitable businesses but still struggling for cash. It may happen. So profit and cash are not equal. Sometimes the profit and loss account may show more profit, but the business is struggling for cash. Liquidity problem is there. Profitability is there, but the company, the business is facing liquidity problem. That's why we should not think that profit is cash. This is because. Now cash budget. The most important part of this video is cash budget. In the coming video, I will do the problems on cash budgets. Cash budget for short period. Short period means monthly we will make the cash budget. So the cash budget is a forecast of expected cash receipts and payments for a future period of time. So what is cash budget? Cash budget is a statement which shows the receipts of cash and payments of cash during a future period of time. That means in the next 3 months, next 4 months or next 6 months, what are the expected receipts and what are the expected payments. So this cash budget shows the expected receipts, expected payments month by month. Then the cash budget consists of 3 parts. The first part, estimates of cash receipts. What are the expected cash receipts we may have in the next 6 months? The first part, estimates of cash receipt. Second part, estimates of cash disbursements. Disbursements means payments. So a business has to estimate in the next 3 months or 6 months monthly how much we are going to receive the cash and how much we are going to pay the cash. So first part receipts, second part disbursements or payment. Thirdly, the closing balance of cash at the end of each month. Suppose our budget starts from January to 30th June, 6 months. So every month, January, how much are the expected receipts, how much are the expected payments. Suppose the receipts are 80,000 and the payment is 60,000. 60,000 receipt, 80,000 receipt, 60,000 payments. So 80 minus 60, 20,000 is the closing cash balance. Now this closing cash balance of January will become opening cash balance of February. In February, we are having opening cash balance. Again, what are the expected receipts minus expected payments? We'll get the closing cash balance of February. The closing cash balance of February will become opening cash balance of March, like that. So 3 parts, estimated receipts, estimated payments and closing cash balance. So cash balance does not include depreciation and non-cash. The cash budget consists of only cash items. Any non-cash item like depreciation or bad debts, these items will not appear in the cash budget. That's all. Now, preparation of cash budget month by month would involve making the following estimates. So, if you want to make the cash budget month by month, monthly, so we need, first of all, as regards cash receipts. Regarding cash receipts, the expected receipts are receipts from debtors. Who are debtors? Credit customers. The customers to whom the business sold the goods on credit. So we will give credit period. 1 month credit period, 2 month credit period, 3 month credit period, like that. So after that credit period, the customers will pay the amount. So these are the receipts from debtors. So regularly the business will receive the money from debtors, customers. That is one of the receipt. Second, cash sales. We will not sell all the goods on credit. Some goods are sold on cash basis also. So receive cash inflow will be there on account of cash sales. Any other source of receipt like interest received or dividend received or rent received, these different types of receipts may be there. So we need the cash inflows from different receipts. Now payments. As regards payments. Payment to be made for purchases. When we are selling the goods, we have to purchase. Without purchasing, how we can be able to sell the goods? The purchases. The payment made for purchases to the suppliers. Secondly, payments to be made for expenses. Apart from purchases, monthly expenses have to be paid. Monthly expenses like rent, salary, etc. Then payments to be made periodically but not every month. There are some payments which are made periodically. That means once in 3 months, once in 4 months, or once in 6 months, not every month. Periodical payment like debenture interest. The company has fixed that we will pay debenture interest on 30th June every year. That means on 30th June we have to make the payment, not every month. Similarly, income tax. Income tax will not be paid monthly. It will be paid anytime. That means on 31st March or 30th June or 30th September, like that. Then sales tax. Just like income tax, sales tax will be paid. Dividend to shareholders will not be paid monthly. Any particular time, dividend will be paid. So these are the expected payments we require. Importance of cash management. Cash management is very, very important for every business, whatever be the nature of the business and whatever be the size of the business. It is very, very important to manage the cash. Why? First of all, ensures business continuity. If we do not manage the cash, the business will collapse. That means if we do not pay timely salary, if we do not pay the rent, if we do not pay the electricity bill, if we do not pay timely to the suppliers for purchases, the business will not continue. So if we want the continuity of the business, proper cash management should be there. Second, improves investment opportunities. There are many investment opportunities arising in the market. The business must be in a position to grab the opportunities. If we have the cash, then only we can be able to grab the investment opportunities. Otherwise, if we are suffering, if there is cash crisis, how we can be able to grab the investment opportunities? Thirdly, enhances credit worthiness. Market. In the market, the business has to maintain the credit worthiness. Credit worthiness means everybody must have the trust on the company. That means so many stakeholders are there. The shareholders are having the stake that they want the dividend. The bankers is having the stake to get the interest along with repayment of loan. The supplier is a stakeholder who wants the timely payment. So many stakeholders are there. If the business can be able to meet all stakeholders' expectation, then the credit worthiness of the business will increase. The bankers will come forward to give the loan. The investors are ready to invest in the company. The suppliers are ready to supply the goods. The credit worthiness will increase. Reduces borrowing cost. Normally what will happen? Before lending the money, the lender will see what is the credit worthiness. If the business is having good liquidity position, then the lenders even will agree to lend the money at a lower cost. So before lending the money, the lender, that means the banker, suppose banker is the lender. The banker will see what is the credit worthiness, what is the liquidity position of the business. If the liquidity position is good, the banker ready at a lower cost. That is the benefit. Next one, improves liquidity. Liquidity means ability of the business to pay the current obligations on time. That is called liquidity. So all the current obligations can be paid on time if our liquidity position is good. So if the cash management, proper cash management is maintained, definitely the liquidity position will improve. Lastly, effective working capital. The working capital is the excess of current assets over current liabilities. So every lender, every supplier, every investor will see what is the working capital position of the business. So this shows the importance of cash management. Lastly, in this video, I want to show the format of cash budget. In the coming problems, I'm going to do the problems on cash budget. So what is the format of cash budget? See here. We have to open the columns for months. Like 3 months we have to make the budget, January, February, March. The 3 columns we need at the extreme right hand side. 4 months budget, 4 columns, 6 month budget, 6 columns we require like this. Now in particulars column, receipts. What are the expected receipts? In the problem it will be given. In business, the business already knows that what are the expected receipts, from where the money will come. Kahan se paisa aayega. So opening cash balance, our starting point. Then cash sales, collection from debtors. Every month we sell the goods on cash. That is the receipt of cash. Every month we will receive the money from the customers, from the debtors. That is also regular. Interest and dividend received. Sometimes interest may be received every 3 months or 4 months. Dividend may be received. Second and thirdly, sale of fixed assets. Sometimes an old fixed asset which is not operating will be sold off. Cash is received. Sale of investments. Sometimes investments are sold. So these are few examples of receipts from where the business will get the cash. A is the total receipts. Payments. Just like cash sales, we have cash purchases. Every month we may purchase the goods from the supplier on cash. Payment is made. That is cash purchase. Payments to creditors. Creditors are the suppliers who supplied the goods on credit. Later on, we have to make the payment to the supplier. That means we have purchased the goods for 1 lakh. The supplier says, pay me after 2 months. So after 2 months, we have to make the payment to creditor, to supplier. So regularly, we have to make the payment to creditors. Then payment of salaries, wages. Every month, the salary wages have to be paid to the employees, to the workers. Then payments for other operating expenses like rent, like telephone bill, electricity bill, repairs. So many operating expenses are there. Then payment of taxes. If payment of tax is there during this period, so it is a payment. Then payment of dividend, purchase of fixed asset, purchase of investment, etc. These are few examples of payments. So by watching this video, you can be able to remember that the format will be like this. Like this we have to make in the examination. You have to take all the items. This is only an illustration. Example. B is the total of payment. A is the total of receipts. B is the total of payment. So A minus B. You will get the closing cash balance. Suppose 80,000 is the receipt. 60,000 is the payment. So 80 minus 60. 20,000 is the cash balance at the end. That's it. So in this video, I have explained you the cash management. What is the importance? Why the cash is why cash management is so important? How to estimate the cash? What is the importance of cash management, and how to prepare the cash budget month by month? So by watching this video, definitely you will get the confidence. You will get the knowledge, command on the topic. In examination, with confidence you can write. And next video I'll start the problem. Before that, I want to declare that I have started uploading the videos to members also. So you can become the member and watch my special, separate videos in the membership club. So if you are satisfied, give a like to the video. Share my channel among your friends groups so that more students can watch the video. Subscribe my channel if you have not yet subscribed. And comment from where you are watching this video, because my video is being watched in different countries. When I see the analytics, it is being watched more than 30 countries apart from India. I want to know from which country you are watching.